Monthly market report for February 2025. Market movements. VN Index closed the month on a strong note, rising 3.2% month-on-month to surpass the 1,300 level for the first time since May 2022, despite the overhang of global uncertainties. This rally was driven in part by investor confidence that Vietnam remains relatively insulated from the U.S. trade policies, including the U.S. President's announcements of 25% tariffs on imports from Canada and Mexico, as well as an additional 10% tax on Chinese imports. Improved market sentiments led to a significant boost in liquidity, with average daily trading volume increasing by 39% month-on-month to 624 million USD in February. However, foreign investors continue their selling trend, recording net outflows of 375 million USD, widening from 255 million USD in January. Despite this, robust domestic participation supported the market's upward trajectory. Sector performance. 7 out of 10 sectors posted gains in February, with materials leading at 8.3% month-over-month, followed by industrials 4.8% month-over-month. We observed that small and mid-cap stocks in steels, rubbers, mining, electricity, and construction demonstrated strong rallies. Their price gains were largely driven by rising commodity prices, increased attention on rare earth minerals, government-supported policies, and regulatory developments. In contrast, information technology, negative 7.8% month-over-month, and consumer discretionary, negative 2.6% month-over-month, lagged behind. Large-cap tech stocks and some retail names have dragged down the overall performance of these two sectors, largely due to profit-taking after the strong performance in 2024. Macro review. The macro data for first 2 months of 2025 reflects a divergence between external and domestic factors, while exports and industrial production were impacted by U.S. trade policy, public investment, foreign direct investment (FDI), and retail sales still show positive momentum. Trade. Exports surged 25.7% year-over-year in February due to the Tet holiday effects. However, the export growth for the first 2 months of 2025 slowed to 8.3% year-over-year, down from 19.6% in the same period of 2024, reflecting cautious global consumer sentiment amid concerns over U.S. tariffs. Imports grew 37.7% year-over-year in February and 15.9% year-over-year in the first 2 months of 2025. The trade balance swung to a 1.5 billion USD deficit in February, its first deficit since May 2024, narrowing the trade surplus for the first 2 months to 1.5 billion USD, down from 3.1 billion USD in January. Industrial production. The Industrial Production Index (IIP) rose 17.2% year-over-year in February and 7.2% year-over-year in the first 2 months of 2025. This growth momentum shows signs of slowing compared to the 8.3% year-over-year growth in 2024. The S&P Global Vietnam Manufacturing (PMI) posted 49.2 in February and 48.9 in January, both below 50, indicating a muted outlook. Public investments. Public investment disbursements surged 36.5% year-over-year in February to 37.9 trillion VND, lifting the growth for the first 2 months of 2025 to 21.7% year-over-year at 73.2 trillion VND, fulfilling 8.5% of the annual target. This increase was primarily driven by local government initiatives, highlighting the positive impact of recent deregulation measures. Foreign direct investment (FDI). FDI disbursement increased 9.1% year-over-year in February and 5.4% year-over-year in the first 2 months of 2025, slowing from 10.0% in February and 9.8% in the same period of 2024. However, the registered FDI remains strong, rising 18.2% year-over-year in February and 35.5% year-over-year in the first 2 months. Retail sales. Retail sales show robust growth, increasing 9.43% year-over-year in February and 9.38% year-over-year in the first 2 months of 2025, indicating a recovery in domestic consumption. Consumer Price Index (CPI). Inflation inched up 2.9% year-over-year in February and 3.3% year-over-year in the first 2 months of 2025, which is still below the target of 4.5 to 5%. Market view. The increase in market liquidity and domestic investor confidence in February reflects growing optimism fueled by the government's ambitious GDP growth targets, expectations on high credit growth, and an accommodative monetary policy stance. The State Bank of Vietnam is expected to continue its easing measures to support investment and consumption, further underpinning economic momentum. Looking ahead, we see that several key factors are likely to sustain market strength in March, including first quarter GDP estimates, corporate earnings releases, and insights from annual general meetings. Additionally, further developments in U.S. trade policies and leading global supply chain shifts may present opportunities for Vietnam. The combinations of strong domestic sentiments, policy support, and macroeconomic tailwinds positions Vietnam's stock market for continued expansion in near term. That concluded the market report for February 2025. Thank you very much for watching. Please stay tuned for more insightful updates from Kim Vietnam.